I think that's going to be one of the biggest challenges we have now and in the future is what the hell is real? Is this reliable information?
I just saw a pretty wild stat that the top 1% of the wealthiest in the world own 49% of stocks trading on the stock market.
Once the sell-off started, then people started to go, oh, were we overpriced? Were we overvalued?
I still think we have some good times ahead of us. I think people just don't know exactly what it looks like. All right, everybody, it is my turn. Thank you for joining us on the King's Table podcast. We've got an amazing episode today. It's going to be a shorter one, but a lot of good stuff. So we're going to get into today. There's obviously been a correction in the stock market. This is exciting times. You're going to get to hear all the guys' thoughts on this. I'm not a huge stock market guy, but excited to hear what they all had to think about it. So what are we currently seeing in all of our markets? As you know, we've got a pretty diverse group here. And as always, you're going to get to see the thoughts from the gentlemen about what's coming. This is so interesting right now. Can you believe that Google is actually blocking Donald Trump? You literally search it, Donald Duck. This is crazy. So we'll touch on this briefly too, the future of AI concerns. Wait till the end of this and look at what Aaron pulls out of his hat. It's amazing what's going on with AI out there, but also really scary. So hopefully you stick to the end to see that. Join us today on the King's Table podcast. Thank you guys, as always, for tuning in and look forward to another great episode.
All right, guys, let's get into it. Lots of fun topics. We got a quick episode. Good morning, everybody. Good afternoon. Let's just get into it. First of the week, stock market has been having its worst week all year. Tech stocks are just completely crashing. Let's see. I want to pull up a chart here to kind of show what's going on because I think it's an interesting situation. It's making a lot of news. All right. So yeah, basically all the Mag 7 have been just crushed this week from missing earnings. I think that it's really important to have perspective here because since November, NASDAQ has basically had a 40% run. So it's taken about 10% off of the high. But really, we've had probably one of the fastest, biggest runs we've ever had. So we're hitting the news about having the worst week ever, but people are just taking profits. So that's what's going on in the stock market. I want to see what you guys think, if this is a trend, if this is just profit taking, what's going on here. And I actually want to transition into what Google is doing with censorship. Two fun topics, right, to get it off. Let's go.
Yeah. I think this matters. I think this matters because it's actually a pretty significant bounce back. I think that over the last year or two, as things have been priced strongly, there's been talks of bubbles and things like that. And there's a couple reasons that people have said of why this is happening. One was, last week, if there was ever a time to go like, hey, there's some turmoil in the world, right? Like, so attempted assassination and then a flip-flop where now instead of Biden, it's Kamala and all these changes. And I think people are just a little unsure of like, hey, is our world okay right now? Is our country okay right now? And so I think some people are just taking their profits. They're like, you know what? We've had a really, really good run. And when you're a little unsure about who the president's going to be, when you're a little unsure about like civil war, again, if like Bullet was 2 inches to the right, our world would be in chaos right now in the US. There would be neighbors like fighting. Like I can only imagine how intense the fights would have just increased. And so people are like, oh, we're 2 inches away from like what could have been a catastrophic thing. I think that's why some of the sell-off happened. I think the other thing that it said it was a result of was earnings didn't hit what they were supposed to. Like earnings reports were down. And there was this talk of over the last year, so much of the boom has been like AI, where we type stuff into ChatGPT and we're blown away. And we type images into ChatGPT and we're blown away. And videos, like ChatGPT is the coolest thing in the world, but it's still not profitable, right? They're still spending an incredible amount of money on these engines. And if every time we typed a question into ChatGPT, it cost us like $20 a question or $50 a question or $100 an image, we probably wouldn't use it to the same extent. But for some of those things to get profitable, they got to figure out how to do that to where either people are going to pay $100 an image or they're going to figure out other ways. So I think that's another side of it is like once the sell-off started, then people started to go, oh, were we overpriced? Were we overvalued? Not hitting ratios. But it's a pretty big dip. When you say it's like the biggest dip since 2020. And even with housing, we get to say like, oh, we're still way better than we were 18 months ago. But that also means there could be a long way to go for a correction.
Yeah, I was just looking up, like Google's trading at 25 times, Tesla's trading at 65 times, Nvidia is trading at 65 times. So it's still a pretty fair market. It's still pretty fair priced.
65 times is crazy.
That's wild.
Well, these are some of the biggest companies in the world, right?
Yes, but it is still betting on this upside that, like, I mean, I believe that AI is all the jam. Freaking love it. Right. But when they talk about how much money they're spending on a daily basis, you start to go like, oh, that's why I'm just a normal old guy out here, because I could never comprehend running things like that.
It feels like this pullback was 100% necessary, and it is perfectly timed with earnings. Tesla miss, and therefore, right, you see the pullback. I think this is all relatively par for the course. You still see a lot of the big economists that are saying the S&P is going to, break, is it 5,000?
Are you guys using this as an opportunity to average cost?
Well, if you're a long-term investor, why would you not?
Of course.
I mean, at the end of the day, if you're somebody, I'm 36, so I'm going to continue putting money in the market every single month until the day I die. So I don't see why you wouldn't. Now, I just saw a pretty wild stat that the top 1% of the world, wealthiest in the world, own 49% of stocks trading on the stock market.
Yeah.
So, I don't think this is really hitting too many Americans or too many individuals in a way that maybe the news and the headline, clickbait is making it out to be a little bit more problematic. But I do think at the end of the day, there's something to pay attention to here when markets have pullbacks, right? Those are usually reflective of some news in a particular segment of the market or an industry, something to do with a macroeconomic picture. Aaron talked about a lot of other variables that are in play here that has got, people thinking and, acting a little bit differently heading into November. But at the end of the day, the market movers here, it's all smart money. This pullback was not your mom and pop, oh my gosh, I'm scared about the economy, right? This is all smart money, institutional capital that has quants, that has analysts, that has, very seasoned individuals with a lot of resources making these decisions. So there was obviously a pullback for a reason. And this was a pullback that was predicted and called for at multiple points. Now, are we heading into a recession? That's the conversation more and more people are continuing to have. But as of right now, based on where the market's at, based on what macroeconomic data we're all continuing to take in and see, we're not. And it's not even possible right now based on where the last GDP print was.
I think there's no reason they won't correct down at the beginning of 2024. Like there's nothing great that happened in our economy the first 6 months of this year, because most of those gains are from November 2023. So most of those crazy gains, were over the last 8 months. And when you actually think like what profound thing has happened to justify huge gains over the last 8 months, I don't think we're going to see that. So I think it can correct further down. My last little point on it, I'd love to hear Mikey, is like Elon owns 715 million shares of Tesla. So when you're saying that the stat of like the top 1% own half, that's true. But Elon balances out 715 million people, right, with just one person. So it doesn't mean that it doesn't affect people, because like people that own, a lot of people have $10,000 or $20,000 in retirement, or a lot of cops have $100,000 in retirement that it does impact. But again, for people that have been in the long haul, stocks in the long haul, maybe it doesn't affect you, because 10 years from now it'll still be worth more.
But a lot of them, unless they're day trading, in their account, or, they're stock picking in their own brokerage account, most of them are in relatively risk averse, slow growth, moderate investment vehicles, ETFs that are going to have some blended level of risk, that are not going to be hit and impacted in a very significant way when you see pullbacks like this.
Mike, do you own stock?
Not a lot. And, so I'm not the expert in this, but I think just from a macro perspective, like look what's happened the last couple of weeks. And I don't really think that the stock market cares that much whether Trump's a president or whether Kamala's a president after the fact, because then we know what we're up against. But, I think we just entered a crazy period of unknown the last couple of weeks that probably has everybody think, just get back to what Maddie was saying. Like, this isn't the small ma and pa pulling their money out of the stock market. Like, it's market movers. And what's happened the last couple of weeks, I mean, we all went from, whether it's Biden, whether it's Trump, like even if you just look at our conversation like 4 weeks ago, 6 weeks ago, now all of a sudden, like, what the hell is going to happen? And so I'm just wondering if, part of this is like, okay, and everybody said it here, but, this is an opportunity to take some chips off the table, readjust, and nobody knows what the hell is going to happen. And so I feel like the next few months are just going to be volatile, not just even back specifically to the stock market, but we went from, at least kind of not 50-50, but, got a good idea what's going to happen to like, even back to Ashish's next topic. Who knows? Like, who knows what's going to happen? And until we do, even from a real estate perspective, which we always kind of come back to in my world and most of our world here, do we really care from a real estate perspective that much if Kamala Harris gets elected? I don't think it's going to be the end of real estate. Do things have to shift and adjust? And would we rather have a Trump? Yes. But if Kamala Harris gets elected, we know what we're up against for the next 4 years. We're going to deal with it. It's probably not going to wreck us unless there's a black swan event or the stock market crashes or we get, crazy extremes. But I think even within that, like, I just can't wait till the election's over. And I know if Kamala Harris or Donald Trump or somebody completely different is our president, because then we know what we're up against and we can deal with it. So I just wonder how much of it is even that. You guys started off by talking about, I think Ashish said this, but when you look at the upside, they've made their gains, take some of them off the table and wait a few months.
Yeah. Just cash out a little bit, see what's going on. I think people care less about the politicians. We've given a lot of airtime to Trump, Kamala, and Biden, but really, I think getting into the policies of each winner is what people are anticipating, right? And we talked a little bit about inflationary effects, what's going to happen with different presidencies and what the policies are, the border, all that kind of stuff. I want to talk about inflation because I think I saw this chart and I put it in the chat. Let me see if I could pull it up really quick. I thought it was really interesting because this inflation conversation becomes a little convoluted, and I'm hoping that this chart is right. But this chart, comes from the U.S. Bureau of Labor. You can see in 2020, inflation spikes from almost zero to just shy of 10%. And it's corrected probably back to 3 or 4%. This is for all items, 12-month percentage change, consumer price index. And so pretty much during the Biden administration, we've seen quite a bit of inflation, but that's mostly caused by monetary policy that maybe was, all that printing in the Trump administration, but they've done a pretty good job of managing it. I mean, all intents and purposes, is this a soft landing? Like, have they managed through this? Have their policies worked? Or nope, it's just, it's something else. What do you guys think? Oh, and can I just say before I get your feedback, is like, this is Josh Shapiro. This is the governor of Pennsylvania. Does this not look like our one and only Aaron Amuchastegui with brown hair? Does that not look like him?
That's why I had to dye my hair blonde. Everybody just kept thinking that was him.
Does this guy not look like Aaron Amuchastegui with glasses and brown hair?
Has somebody said that to you before, Mooch?
I've heard it before. Yeah, it's pretty funny.
Oh,
that is
God, it's so good.
If he ever gets elected as president when he's like 90 and he needs a body double, then we know who it is.
Dude,
yeah, I'll be ready.
Our boy. Is our
Remember those old movies with the body doubles? That's really good, Ash. What was your question? What were we talking about before my blonde hair, brown eyes?
We were talking about inflation.
Your question was whether or not we're going to have a soft landing. My quick 2-cent answer is it's so hard to tell because I think the inflation chart looks amazing actually, right? It looks like they have pulled off a miracle, and if it holds that line, like that's the amount of inflation that they've truly been wanting to have. Because for many years they wanted more inflation. They wanted the inflation goal to be higher, and they couldn't get inflation. Inflation is a great way to pass money from retired people to young people. and technology always offset it. So they were trying to get inflation that was higher than the average. And then we went way through that. The number that it shows that now, if that's accurate in the chart, that's like been the goal of the government forever for inflation. So now they're at an amazing inflation rate. The kicker is it's a soft landing if people don't go into like a crazy down spiral right now. And for me, it's 50-50. And if you listen to the guy that predicted Trump getting his ear shot off, like it's like 90-10 where that it's going over. So if you don't listen to the Christian psychic guy, if you want to like see the glass half full, but man, I think it's more likely that they waited too long and they raised too hard and because I mean, they got the inflation in check, but will it be a soft landing? It doesn't feel like it for me. I don't think it's going to be a soft landing. I think we're going to see some turmoil that's going to make them think that they pushed us into recession, and that was the goal, was they were going to avoid that.
You have any specific catalysts you're paying attention to that you think are going to be what tip the scales?
I think I told you guys that every time we make a payment on our line of credit right now, they just reduce the line.
So liquidity, maybe.
Liquidity. And liquidity, like debt is amazing until we become illiquid. Debt is how we get super wealthy during times of low interest. And debt is what will crush people during times of high interest. And the liquidity, the extra money we were able to make in our businesses just from low rates and low lines of credit is really hard to quantify. But I know that it was a lot. I know that our success on our extra income was based on cheap money that we could get. And so that's the biggest thing that I see affecting our day-to-day on businesses. We're hiring more and more people that are saying like, hey, is there any way I can get a draw within my first 2 or 3 days? Because like they're only showing up to work because they have a bill that's due next week and they don't know how to keep going. So feels worse than, to me, it feels worse than they're saying, but maybe it just hasn't crashed out yet. But I do feel like we're going to, but liquidity is the biggest factor that I've seen.
The other side of it is U.S. debt. You know, this continues to be something that we kind of just continue to sweep under the rug like it's not a big deal. You saw Elon Musk post about it the other day that, you know, America is going bankrupt. You've never heard anybody say that out loud, right? And not saying that that is true or not. It's an assessment from a pretty smart guy that is pretty, resourced and wise. But if you look at our U.S. federal debt, it just hit another record and is $2.5 billion away from reaching a $35 trillion debt, which is something we've never done. It's the first time in history. And since 2019, the U.S. federal debt has skyrocketed by $13 trillion. I mean, that is, when you think about, I don't know, if we were to just take,
Since when, Maddie?
2019. So let's just say,
so last 5 years, it's almost increased 30-40%.
Yes, 37%. 37% over a 4.5 year period, when it took us, however many years to get up to that $13 trillion. So when you think about infusing that much capital and taking on that much debt in such a short period of time, when it took us, I don't know what timeline I would want to use to say it got up to that point in time, but to say that we infused 37% in a 4.5 year period, to think that that's going to flush itself through the system and not have, any ripple effects or repercussions, that I believe still are going to take some time to see where those cracks in, our ecosystem are starting to rear their ugly heads. A soft landing is a very challenging, thing to discuss and say if you're the Fed right now. And that's, if depending on what administration comes in, if you look at, we'll just call it the same administration and the continuity of what's already been taking place, because they share very similar ideologies on, a lot of these economic and foreign policies, a good chunk of that is probably going to, continue on and put us into further debt. So I think there's, this weird window of time that we're in right now, that as we determine what the next, powers that be, let's call it, are going to remain or come in, is going to be very telling as to what type of economy and opportunities or challenges we may see heading into 2025.
I have a question. Maybe I'll take a 90-degree turn. We've talked a lot about politics, economics, the last few months. We're posting this podcast the first week of August. We got 5 months left of the year. What are you guys personally doing in terms of capital allocation, in terms of investment within your business? Are you being patient with all this information and this turmoil, this uncertainty? Are you being more aggressive? Are you investing? Let me start out with Mike. What is, with all this information, without getting too distracted with it, how are you deploying all this information within your business? I know, Mike, you're like raising funds, you're buying things, you're getting deep into operations. We enjoy these conversations and we're learning and we're riffing, but does this stuff just in its own cocoon and just conversational? Are you taking it as you make investment decisions and hiring decisions? So maybe we go around the table and talk a little bit about that. I think that's fun to hear from the listener's perspective on how are you taking all this information and applying it within your business over the next 5 or 6 months as you finish off 2024.
Just to be clear, and I was thinking as I was listening to Maddie, and as you were asking that question, if you look back, 8 weeks ago, 3 months ago, Aaron was talking about challenges in his business. I'm talking about challenges in my business. I think everything that we knew 3-4 months ago is the cracks are really starting to show up. So I don't, just to be clear, I'm not buying anything. Do I want to buy stuff? Yeah, but so does everybody in real estate right now. But I still think we're in this weird time in real estate where, it's either going to stabilize or it's going to get worse. And so nothing's really transacting that I can see yet. And maybe somebody else is seeing something different. But what I'm working on in my business, even buying things, yes, we're buying houses. We need a lot more houses in our portfolio, but I haven't bought a new property since 2019. I'm still working on fixing everything that we bought in a run up. And so I just wanted to be clear on that. Like, I'm not this bullish real estate investor that's out buying things right now. I just don't see a lot transacting. So just wanted to be really clear on that. And again, I think I was literally just thinking back to, Aaron, I don't know, this was probably 90 days ago when Aaron was talking about, the challenges in the business and going out there and changing things and, looking at every single thing in the business. And I think that we were just scratching the tip of it at that point in time. And I think you're kind of starting to see, whether it's, you're hearing this, like, I mean, you're seeing the unemployment rate increase. What does that mean? Businesses are cutting back. You're seeing costs be cut. Why? Well, because it's the fallout of 3 months, 6 months after we start seeing, the unease. And so I think we're still, I'm not a doomsdayer in any way, shape, or form right now when it comes to business. I still think we have some good times ahead of us. I think people just don't know exactly what it looks like. And so, even back to what we were discussing with Maslow's hierarchy of needs and, the consumer cutting costs, I still think we're going to see more of that. Because if there's anything that we're talking about, whether it's, companies and the stock market and uncertainty, I think if you talk to everyday people right now, they're probably experiencing more certainty than they've experienced in the last 3 months, 6 months, couple years. I mean, I kind of feel like, and I don't have like specific data points for this, but I feel like we're in a period of uncertainty right now that we haven't experienced since COVID. And so, I think businesses are going to have to look even more internally over the next definitely 3 months. What happens after the election? Who knows? But I kind of feel like we're in a period of constriction. And so, I just wanted to be clear that everything that I'm working so hard on my business right now, I'm looking at my P&L like I've never looked at my P&L.
So that's a sign that you are cautious because you're just going deeper.
Yeah. And I want to say one more thing too, and then I'll pass it off. I just got back this weekend from a mastermind that I'm involved in, which is the only one that I'm involved in at this point in time. And these are very, very successful entrepreneurs. I feel like this, the small fish in a big pond in this room. And the tone in this event, we meet twice a year, and the tone in this event was completely different than it was in January. And 80% of the room is struggling right now in their business. And 20% of the room is excited about their business and doing well. Those are real world indicators of the business environment. And I want to say one more thing too. This isn't a real estate mastermind. It's not a online business mastermind. It's actually an entrepreneur's mastermind. They're all Christians that are entrepreneurs. And again, I'm one of the smaller businesses in this room, and people are struggling. People are cutting costs. People are cutting employees. There wasn't a survey taken on this, but just from listening to everybody, I bet you 30% of the workforce of the 120 businesses that were represented in that room have been cut in the last 6 months.
Wow. Mooch, what are you deploying? What are you thinking about? Let's stay focused in the next 5 or 6 months. Mike gave a good outline on what he's doing. Are you going deep? Are you going long? What's your thinking?
It's interesting. We're just kind of closing out that stock conversation. And I don't invest in stocks. I'm only a day trader. I'm a day trader gambler on stocks. But right now I don't have any extra cash, right? So I'm not day trading anything right now. The companies that I think are going to start to struggle are going to be the ones where we get to live in excess. So like DoorDash and Instacart. It's like, instead of driving 4 minutes to go pick up my fast food, I'll pay somebody $12 to bring it to me. Instead of doing my groceries this way, I'll pay an extra $40 or $50 to have someone bring it to me. Those are very little like ultimate luxuries that I'm hearing more and more people saying, I'm not going to DoorDash that. I'm not going to Instacart it. I'm going to go save the money. I'm going to actually go shopping today to save.
Yeah, we got
money.
very loose with all our expenses, right? Everybody, businesses,
so like people tightening
personal.
up. So in general, look at all your expenses on stuff. There's, we might have 3 or 4 subscriptions to Apple TV. You start looking at your things and what's getting spent. So it's a good time to actually dial in on your costs and see like, what can we trade out? People are going to be going, oh, we're paying this much to get our house clean. Maybe we'll do a little bit less. It's like the luxuries where people go like, okay, I could actually do that myself. I could actually go grocery shopping myself. I pay my kids to go grocery shopping right now instead of, and I'm actually making a little bit more than if I did on Instacart. Right. So instead of paying Instacart the $40 or $50, I'll pay my daughter $20. Feels like a win-win because I'm going to pay for whatever she wants anyway. So if she has the money to spend first. But on a level of like, what am I doing right now? So I've been working hard in business, right? I've been trying to find new things. I feel like I've found that new thing, but I'm still been experiencing burnout and stress and cash flow issues. And my answer is going to be the craziest thing. Like, so what am I really doing right now? The Miracle Morning and the 4-hour work week. This is the shit that rebuilt my business in 2013, 2014, 2015. That was like when everything else is uncontrollable.
Control
like
what you can control.
Control what you can control. And so it's like waking up a little bit early and reading a little bit and meditating a little bit and getting my workout in. I found myself, I wanted to sit and drink my coffee and watch TV today. And it was like, and my rule was like, no, I'm only going to stream stuff when I'm on a treadmill or on a bike or on something. So it's like getting myself like, no, get down to the treadmill, go do this. Because what I do know, and then the 4-hour work week thing, I used to speak about this a lot, but it reteaches you how to be productive, and it reteaches you how to be like really efficient with stuff. And so right now, if I'm overwhelmed because I have all these different permits I'm working on, I need to sign this contract and sign this contract. I mean, I used to get on stage and tell people like, remember when you showed up to work and you had that one thing to do and you couldn't get it done? And I would coach people on how to do that. And I find myself having that happen where I'm showing up going, I need to get that permit applied for today, or I need to talk to that demo person. And then my day gets reactive. So I'm going back to the basics right now because I don't know what's really going to happen toward the end of the year. I feel like I have found a new business that will be able to counteract the market. It's like being able to sell something below market. The biggest reason, we said to try to tie all that together into one simple thought. You said like, hey, people, like we're now starting to see prices come down on stuff, right? We're starting to see inflation slow down. That happens because people have stopped buying the product, right? Prices don't go down just because they go down. They go down because they had made a certain amount of these and they didn't sell. And they said, okay, not enough people are buying X product anymore. Let's lower the price. So that's also what that's saying, right? So if inflation is in check, that does mean less people are able to buy those things. And so if you don't have money to day trade, and I don't have money to day trade right now, and if you don't have money to go make bets, and what you can control is what you can control. And I think like getting your mind right now makes you to where, because that's the most powerful tool we have for real. Like the thing that has made me the most money is when there's a problem that money can't even solve. And I'm like, how am I going to do this? And the brain just figures out a way to go here, and you solve it. Yeah. So Miracle Morning, 4-Hour Work Week, reread those two things, start doing your Miracle Morning tomorrow. And the second half of your year will be better. Hal's going to love knowing that we did a little,
sounds like sage advice.
Leap for him. I know that's a lame answer too, because
no, it's
like,
not. I think the obvious answer would have been, like answering my question. The right answer is, there's always uncertainty. I think it's funny. I remember somebody told me during COVID is like, what is certainty? What is uncertainty? Like, just control what you can control. So I think that was part of my question is, we talk about all these things that we cannot control, which are, 7 to 10 degrees of separation from our everyday life. So bringing it back home, what are we really doing? What are you really doing? So, I've shared on the podcast 6 months ago, I got off social media because I had to do the same thing. I had to like stop getting all this stimulus and work on your routine and all that. Maddie, what are you doing? What are you thinking? And we know you got your miracle millionaire mind cast routine dialed. So what else are you doing?
Yeah, I mean, I've been pretty consistent with most of my routines for the last decade, to be honest. And that was one thing that I always just, subscribed to in terms of a train of thought of, that Will Smith mentality of I'm just going to stay on this treadmill and stay on this treadmill and stay on this treadmill and stay on this treadmill. And, I think metaphorically, we're all running in different treadmills of our life, but making sure that you're running on the right treadmill is really important. And going back to the basics is really important. I spent the last few years playing a lot of defense and cleaning stuff up that I'm actually on the offense right now. And I think depending on where certain people are in their journey, I find that I am best when I'm on the offense versus when I'm on the defense. And in times like right now, where there is a lot of uncertainty, and it's going back to that Warren Buffett contrarian mindset, when most people are zigging, he's looking to zag. And I think this is one of those obvious windows of time where a lot of people are starting to zig. And I think you can take calculated risks right now and look at potential zags that you may want to lean into that could completely set up the next decade of your life, maybe the next 30, 40, 50 years of your life. And so I think it's easy for a lot of people to get sucked into even some of our chatter, right? I mean, we get into all of these crazy conversational vortex that sometimes can make you get a little bit fearful or a little bit concerned about a lot of the things, like you said, are just completely out of our control. But when I look back at least economically and or socially or culturally, what was going on when I have found my best deals or my best opportunities came to fruition, it was always in seasons like right now. It was always when shit was kind of weird and off and didn't feel right. But if you're trusting in the long-term timeline of the game you're playing and you're trusting in the process and you're putting in your best effort every single day, it's usually in those seasons where you stumble into really cool, exciting opportunities, because those are where the other like-minded individuals are playing and they're on that same path as well. So that's ultimate. I mean, that's why I just closed on, my 70,000 square foot retail strip center. I put a bunch of money into something. I bought it for $1 million and appraised at $3 million before I even closed on it. If I was just sitting on the sidelines saying, hey, nobody's doing deals right now, this is a weird market right now, I don't know, shit could go way bad in 6 months when, Trump and or, Biden or Kamala, gets into office, I would have never been in the game having those types of conversations. So whether you decide to really pull the trigger and put yourself in a pressure cooker, which oftentimes real performers perform best in pressure cookers, you can still be in the game looking at pitches It's all the people that are the spectators sitting in the stands going, oh, that guy struck out. What a loser. Oh, that guy sitting in the dugout. He's not getting any, playing time. But those players are getting paid. And so it's the people on the field, it's the people in the arena, it's the people in the conversations, it's the people looking at opportunities right now that are ultimately the ones who are giving themselves a chance to actually have a big come up. And that's my mindset right now. Doesn't mean I'm swinging at every pitch. If anything, I'm, going to Mike's point, I'm letting a lot of pitches go by. And it's got to be a really juicy, fat, lofty softball that you feel like, if I'm going to swing at this thing, my chances of getting on base and ideally putting points up on the scoreboard are there. That's my mentality right now. And that's, been working out for me. And mind you, I was coming out of a season where I was sitting on a lot of cash, and I still am, because I think, if we go back and look at some of the data here, commercial real estate is a really big issue right now that we've been kind of talking about, but it's every day it's inching closer to being a real issue that we got to talk about. And I mean, theoretically,
Bye.
there's or it's that, and it is going to be a bye to a lot of people, and it's going to be a bye to a lot of people as well. But when you look at office vacancy rates in San Francisco, reached 25% in June, which is the most among major American metros, followed by Houston. Seattle office vacancy rates are at 23.8% and 23.2%. You've got the lowest at 12 and 13% in Miami, Boston, and Tampa. But we have vacancy rates expected to rise to as high as 24% by 2026, with $2 trillion in commercial real estate loans. A significant amount of those in office and multifamily coming due basically starting this month and going forward for the next, 24 to 36 months. There's going to be some carnage in the streets, and there's no reason why there's also a lot of cash sitting on the sidelines right now with a lot of private equity groups, a lot of these big companies, a lot of these big funds. They're not stupid. They know there's something coming here, and it's still working through the system right now.
Mike, you have another thought?
Yeah, and I love like what Maddie just said too, because, being on offense, and I was talking about cutting expenses, and Aaron, going back to fundamentals. But the one thought that I wanted to, it's so easy sometimes, when you're looking at everything again from a macro perspective. But even right now, one of the things that I'm looking at, I was talking about this last weekend. I mean, we're kind of on a hiring binge right now, which sounds counterintuitive, because, I'm saying I'm looking at my expenses and everything else. But what's interesting right now, we've just came out of like one of the, the biggest job growth. Everybody was working so hard to find employees. And even though I'm on a hiring binge right now, it doesn't necessarily mean that my employees are going to go from 50 to 75. I think right now is a great opportunity to look at and I'm hesitant to say this because I don't know what of my staff is listening to this. I mean, Tim is obviously, but Tim ain't going nowhere. But at the end of the day, the majority of my staff that would be listening to this is probably in a safe spot. I think it's a great opportunity for business owners, real estate investors, anybody across the board to really go through analyzing, your current staff. Because as unemployment gets up and the job market softens, take one out of GE's old playbook. Every year, they would replace the bottom 10 to 20% of their employees. And so I think it's just a great opportunity for us as business owners. Just going back to what Maddie was saying, even on offense, I'm not buying properties necessarily. But one of the main reasons for that too is because I have plenty of properties with plenty of problems that I just need to focus on. And I think it's a great opportunity for business owners to really look at, all of their employees, their SOPs, get more efficient internally. Yes, AI could be a part of that, but you might be able to swap out 5 or 10 of your employees right now for top performers that you didn't have an opportunity to hire 2 years ago.
Yep. I love it. I love being in this group, man. It just gives me validation. Am I doing the right thing? Am I working on the right stuff?
The biggest businesses I ever discovered was in a time just like this. Like when I first started doing the courthouse step foreclosures, I felt this sick and this stressed and this everything. And Maddie's point of like, and then all of a sudden when I found like the one thing that was working and nothing else was, it was like a total flip, gets switched. Switch gets flipped. The, we're just talking about like the commercial implosion type stuff. Housing, when the housing implosion happened in 08, 09, 2010, in California, $700,000 houses started trading for $200,000, right? And the uproar was that it was happening to families. And so there was all this government intervention. I don't think we're going to see government intervention on the commercial space because most of the people getting foreclosed on, they don't really care. Half of them, like Blackstone, is walking away from properties and getting foreclosed on and then like rebuying them, right? But the price value things that you're going to see are going to be the same sort of percentage, right? A $700,000 house became a $200,000 house. Maybe a $70 million building becomes a $20 million building. And when they have an opportunity to try to do workouts and things like that, I don't think they're going to. I don't think the only people that are actually in danger that the government cares about are the banks, not the actual investors. And so when the banks take on the assets, like who knows what they'll do to like let them keep going. But I was just started pulling up like just some different foreclosure stuff that's like posted, this month in Texas. And there's like, $35 million loan for, house for a loan on this thing that was like only not that old, right? So the $35 million loan going into foreclosure, tax value is like $60 million and they can't refi.
What kind of, was that a single family home?
No, this is it's like an apartment complex.
Oh, okay. I was going to say that's an expensive ass house.
Yeah.
That makes sense though, right? I mean, those things are going to have to reset in some way. And if banks aren't going to be the ones to bail them out because the economics don't make sense for them based on where the Fed's at, they're not going to play ball. So there is going to be some retracing of values in commercial real estate assets in a pretty big way, in my opinion.
I think I want to double click on what Mike said too. For me personally, we've had a really strong 2-year run. And you could argue that since the bottom of COVID, depending on which industry you're in, the market's pretty frothy. We started the conversation with that, right? The whole world is pretty frothy. The amount of money, liquidity, velocity of money is just really frothy. And I think it's a really great opportunity for you because when you're growing, you're not looking at your income statement. You're not looking at the cost. You're not looking at the line items. Everything just you just start to spend. And for me, I am definitely looking at the depths, the small little nooks and crannies of where there are expenses to cut and tighten up. I'm sitting here in China, meeting with vendors, negotiating better contracts, working on all the procedures and processes that get a little lazy when you're growing like crazy, looking for the couple of points here or there. Because if it does correct and consumer demand stops or the real estate market crashes or what have you, it doesn't matter what segment you're in. You want to be prepared and you want to just have a tighter balance sheet, tighter. I think it's interesting when companies are growing, they spend so much money and then there's like a 20% correction. Now they're no longer profitable, right? So the business doesn't even make sense anymore.
Right. If you're heavily levered, a 20% change on your revenue could actually increase your, it could cut your profit to zero, right? Like just a 20% revenue change can make you to where now you're losing money every month. It's not like your profit goes down 20%. It's you got a business.
Well, Mike, I mean, the rooms that I'm in are similar to what you're talking about, which is entrepreneurs they're not necessarily cutting back, but they are going deep and they're trying to recalibrate their organization. They're trying to figure out which B players they need to be replaced. How do we increase margin? It's not necessarily just about sales and growth anymore. It's really taking a step back, looking at our internal processes, looking at the customer journey, things like that. So, and there's an argument to be made that just prepares you better for either a downturn or, hey, we're ready for an upturn, right? We're ready for another spike because we're just more efficient. We're more profitable.
This is Darwinism at its finest in the business world, right? I think we saw a statistic that, well, let's see. It says as of July 14th, 2024, 346 companies filed for bankruptcy in the first half of the year, which is the highest number since 2010.
Oh yeah, I remember that stat.
This is also higher than any comparable figure in the previous 13 years. In June 2024, 65% of the filings were Chapter 11 reorganizations, which is almost 10 percentage points higher than the same period of 2023. So, I mean, this economic climate and landscape for small businesses and for big businesses, which they can obviously absorb a lot of the turbulence a lot better. It's a really challenging landscape for small businesses. And going back to Mike's point, I think now more than ever, while defense is absolutely critical and there are certain areas of defense in your business you should always be playing no matter what's going on, but obviously what happens in certain times of the economic cycle, you look at different areas maybe a little bit differently. This is also, an opportunity that when many people are struggling, there might be some opportunity in certain business lanes to go on the offensive as well. And I'm curious if you guys are looking at or seeing any of that in your industries or in your business while you are playing, defense in certain areas, which I think everybody is and should be. Where are you guys looking at sharpening the axe in terms of opportunity? Where are you seeing things get exciting? If you're looking out around the corner and we make it through this next season, what do you think business owners, investors, entrepreneurs should be thinking about in terms of offense in their business or in certain aspects of, industry trends that you guys are paying attention to right now?
There we go.
He was ready.
Well,
He
I was
ready.
actually thinking about this, Maddie, when you were talking about offense. And I think that question, for any business owner in any sector, I was reflecting back to this. And I think if you look within your own business, assuming that you want to stay in that business lane that for me, what I think the opportunity is going to be in the mobile home park space, we have 20 communities. So we're not a small operator, but we're definitely not, the biggest of the big. And one of the challenges in the industry is so much institutional money has come in that it's hard to compete and buy a decent property. But when I look at my internal challenges, even at a mid-size operator, I look at the smaller operators that have bought 1, 2, 3 communities over the last 1 to 5 years, because the theme in the mobile home park industry, and you guys have all heard this, is like, mobile home parks, they're so easy and you just collect lot rent and it's simple. It's not that simple. And so I guess the point that I'm making here is like, look within your own industry and see the challenges that you deal with, and then think within that industry, like what other people are going to be challenged that maybe I'm a little further along, that I could solve a problem that maybe I've already solved, that I could step in and pick up something for them. So to bring this together, I think where my opportunity lies in the next, 1 to 3 years, if I am going to acquire properties, it's going to be from somebody that bought a single mobile home park or maybe 2 or 3, and somebody told them, oh, it's simple, buy a distressed community, set homes, just, don't rent them. You don't own the homes. There's no maintenance. Find those guys or girls and just buy their one community from them, because it's not that easy. And I think a lot of times when, we've talked about this before, but there's so many people out there teaching right now, go buy a laundromat, go buy an HVAC company, go buy a plumbing company.
Buy.
It's simple.
Buy.
It's not that simple. So find that guy and buy it from him.
That's great advice. We do that with housing. Yeah. We would go, as soon as when a landlord is evicting a tenant, they've never hated their business more, right, than when they're evicting a tenant. I'm going to share a few things really quick as we kind of bring this home. The big old apartment complex here, right? The beautiful, it's a beautiful like commercial. And we're talking about like, what are the opportunities or how did this happen? You go into the history of this thing. If you guys are watching this on YouTube, you see. So in 2011, this apartment complex sold for $13 million. So that's a long time ago. That's 13 years. But 10 years later, it sold for $42 million. Right? So a $13 million investment 10 years later was a $42 million investment. Right? Like, so is tripling in value over 10 years, a 30% IRR too high for real estate? Yeah. Especially if predominantly up until 2019, that market was gaining 5% per year over year. Now there's a $33 million loan on it that's getting foreclosed on because they can't refinance. And the new cap rate puts it right around 20 million bucks. So what's going to happen? It's going to revert to like these 2011 prices. So 2015, I guess, is when is the last transfer. It went from 13 to 14 million in 2015. So 2015 is worth 14 million. 26 years later, it's worth 42. So that shows like some of what's happening. And then you can see now it must have been a value add because these are all the people that have leaned the property. All these green marks are like other people that have now leaned it. And so there's plumbers on here, mechanical. So that was like probably a group that did a syndication, so they're going to do a value add. In a more fun ending, our other king, Elon Musk, who I'm a big fan of, and I'm sorry for everyone out there, he has been just crushing it on Twitter lately. And
killing it.
I'm going to present this. I know we only have like 1 or 2 minutes to finish for you guys to finish a thought on it. All right, cool. Wow, Google has a search ban on President Donald Trump, election interference. And so Elon is posting that. And then we saw another post from a politician that said, a few hours later, Google fixed it and said it was just an anomaly. How ridiculous if you search President Donald, the options were Donald Duck or Donald Reagan for that. Like the fact that it's so crazy that we still face this. I'd love to hear your guys' thoughts on that. But then also why I think, Elon we talked about it last week. He's trying to be that guy that says, I don't care if you guys like me or not. And then this is just a hilarious little clip. But the problems with this are like what AI is going to be able to do for stuff. Let's see if you guys hear this.
I, Kamala Harris, am your Democrat candidate for president because Joe Biden finally exposed his senility at the debate. Thanks, Joe. I was selected because I am the ultimate diversity hire. I'm both a woman and a person of color. So if you criticize anything I say, you're both sexist and racist. I may not know the first thing about running the country, but remember, that's a good thing if you're a deep state puppet. I had 4 years under the tutelage of the ultimate deep state puppet.
I won't keep going. And what I need to say to everyone is that is fake, right? That was generated by AI. But man, what do you do in politics when you can regenerate? It's funny. To me, it's funny. I'm biased on it. But it was just this weird example of AI in politics and Google. So in one sense, we got Google doing stuff that's totally inappropriate, President Donald Duck. But on the other side, it's so what's really going on? So I know I only left a minute or two, and I don't know what my question is for you guys, but what did you think of that stuff? Did you see that stuff?
Well, my quick tinfoil hat is I don't understand how these things are accidents. How can Google let that happen? How is that an accident, right? It's not an accident. But I think in regards to the Harris video, I think that's going to be one of the biggest challenges we have now and in the future is what the hell is real? What's true? Is this vetted? Is this reliable information? Who said this? Did that person say this? And because of social media, the population around the world, it's not just an American problem, but the population around the world is very susceptible to just whatever it is, it's true. So yeah, that definitely concerns me. Not sure what the end result of is. I think we may have overcorrected.
Tim Kennedy made a post on it. He said, we live in the post-truth, or I'm sorry, not Tim Kennedy, Andrew Schultz. And did you guys see
God, that was so good.
The video I sent to you guys?
Yeah.
If you haven't watched Andrew Schultz, who's a comedian, by the way, but he's also, involved in some politics and some narrative in that. But he went in on all sides. So don't think that we're just trying to push one narrative. But it was hilarious. And his team and how they produced that, it was so damn good. If you haven't watched it, go watch it. But he said in there that we officially have entered the post-truth age. We can't trust the media. We can't trust the government. We can't trust the pharmaceutical industry. We can't even trust the food. And you can go on and add more and more to that, right? I mean, you can't even trust the internet really in a lot of ways anymore because you're only getting one side of it, or you're getting an AI side of it, or you're getting a completely, deep fake side of it, or whatever it is. So it really does muddy the waters in a lot of ways. And was it you, Mike, that was saying this last week in terms of when we're in times like right now, one of the most dangerous things to all of us is the fact that we're just all so damn confused.
Yep.
Nobody knows what's the truth anymore. And, when you make a decision with conviction, right, you do it with confidence. You do it trusting that you've got, strong footing. And I feel like everybody feels like we're making a lot of decisions on quicksand nowadays. And ultimately, all that does is a disservice to the individual, to the people they're trying to serve, to the communities they're making these decisions on, or the companies they're making these decisions on, or the livelihoods they're making these decisions on. So it is a really challenging and tough time. And I think there's still a lot of work and a big war on this information front to be fought. But I'll just flat out say, thank God for Elon Musk. Whether you like him or not, whether you think he's cringe, you like where he puts his money, you like what he says, the fact that he bought Twitter and is fact checking all sides of the aisle and is fact checking all types of people and has kind of now slowly inched his way into being this platform of around like truth and transparency. I respect that in the name of, you know, free speech and no censorship. And so I think there's going to be some very interesting, you know, seasons that we go through. But I will say this: you would have asked me pre-COVID, do I distrust the government? I'd be like, I mean, I don't think they're like for me, but I don't think they're necessarily against me. I would answer that question differently now. If you would have asked me, hey, how do you feel about the pharmaceutical and, you know, big pharma and the medical industry? You would ask me pre-COVID, I probably would have said something similar to the government. Now, I don't trust a damn thing that comes out of the pharmaceutical industry. Unless I'm dying and I need a surgery to save my life, I want nothing to do with them. I don't believe they have my best interests in mind. I believe that they think I am, you know, a customer, and how can they get me wrapped into their ecosystem? I feel the same way about food now, and I would have never said that 5 years ago.
Yeah, the question is, and I know we got to wrap, but the question is like, is trust necessary in a society?
100%, because trust is tied up into law and order.
Right.
And law and order is the fabric.
Yeah. So what are we going to do if, I mean, I would agree with you. I think a lot of people would agree with you, is that a lot of these institutions, and if you haven't listened to that Andy Schultz thing, it's amazing. You have to go Google it.
It's hilarious. It'll give you a great laugh.
Hilarious.
At the least.
But he does a really lighthearted way of exposing this stuff. But yeah, it's so interesting. I think, Mike, you said it, like, I don't know how many employees listen to this. I think it's almost like all of our employees should be listening to this stuff. They should be listening to what we think about, what we talk about. I would agree with you. I wish more of my employees listen to this kind of stuff, because we don't necessarily need to take a side here. We're just looking at the issues. We're looking at the truths. We're trying to make the best opinions we can, trying to have real conversations, ultimately trying to build trust, guys, because that's what a society is foundationally built on. So if we can't trust upper management, can't complain and whine and cry and bitch, might as well just take ownership and figure out what you can do to take control of your own life. So there you go, guys. Another fun, short episode of the King's Table podcast. We processed a few issues, but definitely we'll get into some more next time. Thank you guys so much for listening to the King's Table podcast. On behalf of myself, Ashish Nathu, the Sultan of Sofas, I have with me Aaron Amuchastegui, the trend spotter himself. Look into some trends. Bye, Aaron. Come on, let's go. Of course, Mike Ayala, the sage, coming in from the most beautifully decorated bookcase I've ever seen. And Maddie Agerson, the king of conspiracy. Where's your cone hat, brother? Thank you guys so much for listening to the King's Table. Appreciate you guys. See ya. Peace.